There we go.
Are we going to stay there?
I think we're live.
Yay! Happy Friday! Happy Friday, everybody. It's Finance Friday time. We switched it up on you, sorry. It's kind of a big day in the market, so I think we should talk about it.
Well, a lot of people may not even know.
Yeah, so we'll get there. So Amy and Jim Novakovic, and hit us up on Twitter at Nova Wealth Management, MGMT. Like us on Facebook. We're always posting daily fun facts and tips. Hi, Johnny. Hi, RT. And we also have a podcast, The Nova Wealth Show, and that's on iTunes. And also the video version is on the Wooditch Network. And we just did an interview yesterday. That'll be fun. That'll come out soon.
Yeah, cool guy.
He is a great guy.
Yeah.
So, happy Groundhog Day. Holy cow, it is Groundhog Day, isn't it?
He saw his shadow. 6 weeks.
He did see his shadow?
Yep.
How funny. Breaking news, Dow plummets 670 points. My phone just popped up.
Okay.
So the Dow just closed.
The
Yes. Market just closed down 670 points. So we were going to talk about asset protection. And actually, you know what? I think I'm going to say that. I have a very special attorney that we work with and love dearly and want to bring on, I think, to talk about that. Don't you think?
That'd be great.
As much as I'd love to talk about it with you, of course, we should probably bring on an attorney. Like, he's the expert. That's all he does, really, is asset protection. So I think I'm going to bring him on as a guest. I called him today, so I think he'll come on next week. So today, instead, we're going to talk about the market. What happened, what's going on, and what to do next. And in our business, 2.5%. I know. So it's not, that's the first thing we want to talk about, RT. So it's not as bad, I don't think. Maybe you have a different feeling. We literally just kind of like came up with this in the last few minutes, so we're winging it at this point. My paper is blank.
I know she looks at me right before she pushed the live button. She's like,
I don't know.
I don't even know what we're going to talk about.
That's okay.
I'm like,
We'll figure it
that's
out.
usually the best. That's the best when
So
we don't know what we're going to talk about. I don't like to rehearse.
I know.
So
Anyway, so the Dow is down 670 points, or 2.5%. So that's the first thing I want to talk about. You have to remember it's all relative, right? So they said, I think they just said the last time we had a 670 point move, it was like a 7% move or a 6% move?
Yeah, so the last almost 700 point to the downside move was in the financial crash. But that was a 7%
I don't know if that's true.
move.
I heard them say that too.
7% doesn't sound right.
First of all, that doesn't sound right. Second of all, I don't think it's been that long. I have the laptop right there.
I brought my calculator. Well, we know the level was at like just under 7,000.
No, but didn't we have a 600? We did. They're totally wrong. We had a 900 point move when we were in Chicago like 3 years ago, 4 years ago.
Oh, that's true.
So they're wrong. See, this is why you can't ever believe what you hear on the news in general, because they're not right. This isn't since the financial crash.
Well, she has to like talk on the fly. It's
I
not
know,
like,
I
you
know. But it's been a few years, so it's been a long time. Brexit. Oh, that was another one. Oh, I don't know if it hit 670.
It was a bad day.
It was in the 600s, but I don't know if it was 670.
Yeah,
but that's another. Anyway, it's been a while since 670 points. But the point is it's all relative. The Dow is really high. It's all-time highs in the last couple of weeks. So that's a 2.5% move. So mind you, again,
I actually did those numbers.
What do you mean?
So,
what numbers?
like about 40 minutes ago, I did the math. A 600-point move to the downside at the beginning of today is down 2.29%.
Okay.
Nothing to go crazy about, considering the market was up, I think, about 6% in January.
In January alone.
So, a 600-point move today is around a 2.25, 2.5 move to the downside. But what did I do? I did 3 years ago. 3 years ago. So at the end of 2014, the Dow was at 15,800.
Okay. Yeah.
So a 600-point move,
4%.
then it's almost 4% to the downside. I mean, it's
it's
all
not
relative,
that big
like Amy
anymore.
says.
I mean, it's not. I don't want to say it's not big, but the other thing is we have to talk about why this is happening. So, as of right now, the fear of interest rates going higher, which is funny because we always talk about the general level of interest rates, and right now the Treasury rates on Treasury notes and Treasury bonds, and if you don't know what those are, for the sake of time, it's essentially debt of the Treasury. That's as simple as it's going to get. Okay, so it's the rate that they're paying on their debt, their bonds, and their notes. So the interest rates are going higher. It's the highest they've been in 4 years, I think. It was a 4-year high this morning.
Yeah, the 10-year is around
2.8%.
Yeah, 2.8 something.
2.84 per year annualized for a 10-year investment. So that's still, I don't think anybody would say, oh, that's a great interest rate, 2.8% for 10 years.
No,
I'll lock it in for 10
years. But the problem is it closed last week. I don't know the exact number, but I want to say it was like 2.6 last week.
So it's up.
2 weeks before that, it was like 2.4.
But then you also have to think about the other side of this, and that's the Fed funds rate, which is the rates that the banks go off of for like savings and things like that. They did not raise yesterday. So the Fed funds rate did not go up, which means rates at the banks did not go up. So although the general level of bond rates are going up, the bank rates are not going up. So that's the fear here, is that they started talking about interest rates rising, which I don't really see a fear of that.
What does that look like on there?
I don't know.
Are they saying from left to right?
And this is our old notepad with our old
It doesn't
logo.
matter. But anyway,
From left to right.
The yield curve should be on a slope upward, right?
Yes.
Right? Like a 2-year note should pay 2.
Right.
And a 10-year should pay
More.
3, and a 30-year should pay 5, right?
Right,
Something
right.
like that.
The longer you're waiting, the more your interest rate should be.
Right. And lately, the yield curve is almost not inverted. It's not going
pretty
this way,
flat, though.
but it's very flat. So it's healthy that the yield curve is
Steepening, they call it.
Yeah,
It's
it is
steepening.
starting to steepen, which is healthy.
When in high school rates were closer to 10%. Fox News just said we are unrealistic, and when we were in high school, rates were closer to 10%. Yeah, but that's not realistic either. But that's true. Rates
Well, not
used to
when
be
Amy was
higher.
in high school. You look so pretty today.
Oh, thanks, honey.
She was in high school like 4 years ago.
Oh my gosh, that's so nice. I wish. That
No,
would've been
my
great.
first mortgage, my first mortgage was
Fantastic.
8.5%.
They can probably see my gray hair. Anyway, don't look.
I don't
look
see
that
any
closely.
gray hair.
Anyway, so for the people just tuning in, welcome to Finance Friday. We're talking about the market. So that's really as far as we've gotten. The Dow was down 670 points today, 2.5%. And pretty much a lot of stocks were all down, with the exception of like Netflix and Amazon were not down. They closed up. But I think the other fact, so we talked about interest rates was one thing that they're worried about. They're worried about interest rates rising.
No, and it's not even that
And
people...
interest rates aren't even a threat unless there's inflation, really.
Right.
So
it's not a problem. There's no problem. Everybody, if you just got home from the golf course and you turn on...
And you see the Dow was down 670.
Relax. Everything's fine.
But the other thing is, you said a great statement just like 10 minutes ago. You're like, this didn't change anybody's life today, like being down 2.5%. This is not like Black Monday market down 27%.
Right.
This is not like a life-changing event. It looks really bad, but we all have to get used to now more points is actually a less percentage. But the other thing was they said the big components on the Dow. So there's only 30 components. There's only 30 stocks in the Dow. And so if there's a few stocks in the Dow that are having a really bad day, it can drag down the whole index. So they said Chevron, Exxon, and Apple. Apple was down 3.5% today, I think.
Apple. I don't follow Apple. It's not on our playbook.
I think it was
I don't like Apple.
3.5% today. But anyway, you have to remember that the components also drag down the Dow. Actually, the Apple's in the S&P. So maybe they were talking about the S&P. But the components can really, so a few stocks can really drag it down. So what happens is a few stocks make the index go down quite a bit. And then you have some other sellers that say, holy cow, the market is down a lot. I'm going to try to make some money on this. And then trading happens. And then when you're down 300, 400 points, then stop losses start kicking in. Stop losses are automatic predetermined orders that are already sitting there. And once it falls enough and hits that order, then they trigger. So now you have this snowball effect where the market just keeps going down more and more and more and more. So it's not necessarily a time to panic.
Yeah, and that could work both ways, really, because... like a lot of times people who buy individual stock will say, well, the market's up this much and we're up either higher or lower. Why aren't we with the market if we're in stocks? And to that point, the
There's
indexes
only 30
are...
stocks in the Dow. Yeah.
Right. The indexes
Hey,
are
Ed.
weighted.
Thanks for joining. You can have some input on this.
Hi, Ed. So
Don't panic, Ed.
Sell, Ed. Sell. Hurry up.
No.
Call him. Call Gary.
No.
So
At the airport.
let's look at just from 2 weeks ago. I went back and I looked at some of the positions on our playbook and looked at where they were 2 weeks ago versus
good.
where they are today, just to give everybody some perspective on
That we're still up.
Yeah, the market is fine. This is not a big deal. So Amazon is actually up about $150.
Dollars?
Yeah, it was $12.98 on January 19th. Today it's at $14.46.
Why'd you go back to January 19th?
I just wanted to go back 2 weeks.
Oh, okay. Did
So-
you say that? I didn't get that.
Yeah, so back 2 weeks.
Okay.
So just I'm not going to go through
So
a billion
we're
of these.
still
But
higher is his point.
on Amazon, that's our biggest holding. Amazon is Nova's biggest holding.
Which was up today.
Which was up today. Boeing. Oh, and that's why sometimes if you're an individual stock, you're not necessarily going to go right with the market.
Yeah.
Because the indexes are weighted with certain stocks, and if you're not in those stocks, you're not going to move with the index. So, and that could work for you or against you, depends on how well you pick. Boeing, another one of our biggest holdings. 342 weeks ago, it's at 350 today. Bristol Myers was 62.
Well,
today it's
40
63.
minutes ago. We don't know what it closed.
Yeah, it may have closed
This
a
was
little
40 minutes
lower,
ago, I must say.
Facebook's up $10 over the last 2 weeks. FedEx is down. It was at 271. Now it's at 256.
So, okay, you don't have to go through all of them. But the whole moral is we're still up. So what we do at Nova is we always wait 3 days. I shouldn't say always. That's not true. But when it's
yeah,
something
not always.
like, especially like this though, where there's not like a clear reason why the market is down. You know, it's not like there was a clear event. It's all speculation at this point. Is it just that we were high? Is it the fact that a few of the stocks in the Dow started going down and then there was momentum to the downside? Like I said before, it just triggers selling. Is it interest rates, fear of interest rates? They're all guessing. Everybody's guessing. So we always wait 3 days to kind of see how it shakes out because you don't want to make rash decisions and then, you know, you sell on one day and then you're buying in the next day. You never know what's going to happen. So we kind of see if there's a trend, and also we're watching selling pressure. We're watching volume. So that's another thing that you can look at when you're trying to figure out, if you're trying to figure out what the market is doing. But that's a pretty good indicator is when there's like high volume on the negative trades, on all the selling trades, which we didn't really see a ton of that. As well
when
as
today?
Yeah.
I think there was pretty good volume.
But not like a total panic day.
No. People they're already talking about buying back in on Monday.
Right.
I mean, this is not.
Well, and even Jim and I said, we were like, should we be buying right now? Because we haven't gotten one of these days in a couple of years. We have not seen this. So this is kind of an opportunity too, but you don't want to also buy in and catch a falling knife. So if we just wait till Monday, what you said was, even if it's up 100 points on Monday, we're still down, and you can buy now that it kind of shook itself out, and you can buy on a downtrend,
Right.
you know?
Yeah,
and none of this is recommendations, by the way. This is not recommendations. We're just having a discussion. It's general information.
Yeah, I'm very comfortable buying on a 200-point down day because that's a really normal day. Today's
Totally
not.
normal
I wouldn't
day.
say today's normal.
It's not normal.
It's not normal.
We haven't had a day like this, what we just said, in 3 years.
I think in 2017 we only had 1 or 2 days where there was a 1% move to the downside.
Yeah.
So this
Super
isn't
low
normal. So
volatility.
this qualifies for our 3-day rule, like you
Right.
said. You know, we're going to let things settle a little bit, see what happens.
The last time we did this with the whole 3-day thing was Brexit, when Great Britain exited the the Eurozone. So, sorry, the babysitter's texting me. I got distracted.
We'll wrap up in
Yeah. So what we did was we waited because it was a 2-day sell-off, and then it rebounded right after that. So thank goodness we did wait because it worked in our favor instead of selling and panicking, because at that time that was like the end of the world. Brexit was the end of the world. So we're talking about the market. We've already said that probably not to panic. Wait 3 days. The reason as to what's going on today is not clear. It's either just fear of interest rates going up, overall the volume of selling. So people, a couple of the companies were doing poorly in the Dow index, and then it starts going down, and then there's this snowball effect of triggered selling, and then it just goes more panicked.
And there was even an idiot on there talking about stop losses.
Oh,
the guy's on CNBC, and he uses stop losses.
He uses stop losses? He probably doesn't.
Said
The risk
he
of
did.
stop losses, by the way, so let's talk about what people can do, and then we'll wrap this up. So what can you do in a time like this? So if you are afraid, there are several things that you can do. You can, A, put a stop loss on your stocks, okay? So a stop loss is a predetermined order that you put in the system. So let's say a stock is trading at 100. So I can actually get out. Oh, I have a whiteboard right here. I don't have an eraser, though. Let's say that, I think I can explain this pretty easily. Let's say you have a stock trading at 100. And you say, you know what, I want to stop the bleeding at 95. And I'm just making it up. You could do 90, you could do 85, whatever you're comfortable with. The stock goes down, and once it hits 95, it's going to trigger a sell. So it essentially protects it from just keep going down, 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 down further. The problem with that is it doesn't count, essentially, after hours. So after hours, so Eastern time, the market is open from 9:30 to 4. So after hours is after the market closes or before the market opens. So in my same example, if you have a $100 stock and your stop is at 95, but it opens up, so it falls after hours, and it opens up the next morning at
89.
89, you're selling at 89, not 95, because it triggers the next best order is what happens. So stop losses are not an end-all, be-all. It would then sell you out at 89, so then let's say it tanked to 70, you had out at 89. So it ended up being okay, but I just don't want you to think it's this, oh, well, that's easy. If I just want to sell at a certain price, I'll just put in a stop loss, which is what the guy on CNBC was essentially making it sound like. It's not that easy. It doesn't count after hours.
Yeah, it doesn't. It doesn't work. It doesn't
don't say
always
it doesn't
work.
work.
It
Doesn't
doesn't
always
always work. And part of a lot of times on a down day like this, that's what contributes to a lot of the momentum to the downside. Is because once those stop losses start triggering during hours.
Yeah. Then
once they start triggering, then there's just not enough buyers.
Just computer trading.
So then the bids just keep getting pushed lower.
Yeah.
It's that simple. So
you could put in a stop loss. We're going to talk about options. Options are not for everybody, but this is just for people, for my savvy investors out there, and I know there's a few of you that watch this. You could buy a put. Buying a put on the SPY or the S&P 500, that appreciates when the market goes down.
And we'll see what next week looks like, because
again,
momentum.
We're not going to get into details on that, but
momentum this week has been pretty poor for the most part. This whole week has been red. And I think we had 2 green days.
Yeah.
Yeah, we had 2 green days, 3 red days, but they were pretty red. So it was
even on the green day, it was up a lot more,
and then it gave it all back. That was yesterday, wasn't it?
No, 2 days. Yesterday ended flat. Well, yesterday it
we
opened
were
up
to
lower.
Something.
No, yesterday it opened up lower. It went up way higher, and then ended up closing flat.
Yeah, I think it was up
crazy.
260 at one point,
and
gave it all back. So
there's been kind of negativity this week in the market.
So we'll see what next week looks like, and we could potentially short the market.
And maybe we'll do a live if we choose to do something, and we'll kind of try to help you out on that. But and obviously another, I guess it's an option. I wouldn't do it, but you could sell. You could go to some cash, go to a little cash, and that's tough though when you do that. When you try to go to cash, because then you have to be right twice. You have to be right when you got out and hope it just doesn't rebound and you missed it, and then you have to be right when you get back in. So you have to be right twice. It's not easy, so that's not a huge option. So again, you could put stop losses on your equities. You could go to the sidelines and switch it to some maybe short-term bonds. That way you're not in completely cash. And you could buy a put on the SPY. That gets you protection.
Or you could realize that your time frame is long-term anyway, and you could buy some more.
And you could buy some more. Oh, that's a great one.
Yeah. I mean, that's really...
If your time frame is long-term, then you know you're buying on a down day. You know you're buying lower. You know you're buying 670 points lower.
All earnings were strong. I mean, very few companies missed.
Or like you want to talk about Apple, though, but Apple is down 10% from its highs. That I do know.
That's Apple, though.
It might be a time to look at Apple soon. I don't know. We'll get to that.
I just don't like Apple. I love Apple's products. I just don't like the stock.
We both have iPhones.
I can't feel it.
Full disclosure. Yeah. Okay, so I think that's really it. We don't want to beat this to death because we wanted to get the message out to you that don't panic. Let's be strategic. And if you have questions, please reach out to us. Either if you know our email or go to our website, novawealthmanagement.com, and go to the Contact Us page. and reach out to us, and we're happy to just give you our honest opinion, we love talking about the market. So let's just talk it over and see what you specifically can do, because we gave some generic solutions today, but we don't know every one of you out there. So a stop loss may not be appropriate, a put may not be appropriate. You know, maybe you shouldn't have been in stock in the first place, so you should try. Nuh-uh. Oh my gosh, 666 points. Oh, I thought for sure Ed, if you're still on there, are you kidding me? He has 666 show up everywhere. Anyway. So
okay, we're out.
So you could reevaluate your risk if you shouldn't have been in stock in the first place. If this is kind of freaking you out, you need to reevaluate your risk. Maybe you should go a little more conservative. Also, if you're more aggressive, you could buy more. So I think we covered a lot today. Mic drop out. All right, everybody have an awesome week, and we'll see you next week. Bye.